What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button. It really helps the channel grow. Thanks to all those who continue to tune in, and thanks to all those who continue to drop comments in the comment section of the videos. We do like the back and forth with you. So if you haven't already, also make sure you hit that subscribe and notification button. That way you are alerted to when we release new videos. Now the nightly and weekend videos, like tonight's video, we focus mostly on identifying triggers and targets for trades ranging from scalps and intraday trades to long-term swings and leaps. So if you want a deeper dive into exactly how we set up our charts, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into how we set those charts up, the broadening formations, levels of support resistance, things of that nature. So make sure you check that out. And if you want a free quick reference guide for the STRAT, which is the base of our trading and charting method, make sure you check out the description of this video. We've got a link there for you to a free PDF with the quick reference on there for the STRAT numbering and broadening formations and things of that nature. So while we do talk mostly about triggers and targets in the nightly and weekend video, I do encourage you to watch the full video. We do go over all time frames and give some pretty good insight into those the price action on those time frames. So let's go ahead and take a look at the agenda for today. We'll go ahead and recap the price action from Friday, January 23rd. Then we'll zoom out like we always do and take a look at the week, month, quarter, and year. Then we'll look at the market maker's expected move for the week of January 30th before we zoom back in to set the 4-hour markers and the triggers and targets for Monday, January 26th. We'll also look at the triggers and targets for the week of January 30th, and then we'll review the triggers and targets for the month, quarter, and year. All right. So let's go ahead and check out the charts here, starting out with the 5-minute like we always do. This is how we take advantage of our proven and repeatable strategy to get early scalps in the morning or early entries into longer trending days. Right. So the general rule for this trading method is looking for higher lows at or above opening print or the first traded price of the day. If you get higher lows at or above that opening print, you want to look to get into calls, and you want to target previous high a day and overnight high. Whichever one comes first is the first target. Whichever one comes second is the second target. If we get lower highs at or below the opening print, then we want to look to get into puts, targeting overnight low and previous low a day. Sometimes you can run into situations where we either gap down or we open below the previous low a day, and sometimes right at the overnight low, so you don't have immediate targets at that point, right? Because they're at where you've opened or above where you've opened, and that's the kind of situation that we ran into today. So it can make things a little bit more tricky, but we still have our rules, and as long as you stick to them and manage your risk to reward, even if you take a small loss, overall you should come out winning, right? So here we have the opening print at 62.48, below previous low a day, and where did our overnight low go? Why don't I have the overnight low on here? Let me go back. Let's go with this guy. All right, here we go. A little bit better, a little bit more lines. This is for more of scalping unevenness, the 5-minute time frame. So that's why you see a couple more lines here. But anyways, we've got the opening print. Let's get the tool out so we can see it here. There we go. Opening print. Just know the price level 1 is the opening print. So you can see we immediately pushed down, came down to this 100% fib extension of the 2025 holiday bull flag. Again, that started on December 18th or 17th or 18th, can't remember. And we had a little bull flag there for a few days. And that's the 100% fib extension of that 60.42. You can see we kind of didn't just blow through overnight low. It started to catch a little bit of support there, but we did extend down and it essentially bounced off of that 60.42 level. Didn't quite make it to the market maker's expected move low for the day. 59.90 was that number. If you're not familiar with that, make sure you check out the Thursday video. But we did bounce off of there, and initially we got a lower high right here at essentially at just slightly below the opening print level. So when immediately as we the next candle went below the low of this 2 up, that locked that 2 up in as a lower high. Again, the previous high from Wednesday's price action was up here. So here's this high. This is the next high. Obviously, that's a lower high. So going off of that lower high, we did enter puts. But those, as you can see, pretty much immediately got reversed, which is fine, right? You're not going to win every single trade, but as soon as the next candle went above the high of the 2 down, locking that 2 down as a higher low at that point, we went ahead and exited. And we went ahead and took that trigger because we were right at opening print for the call, right? So we did get a little bit more action to the upside, and we came up to this 123.6 fib of that same bull flag fib extension, but it also aligned with this 15-minute downtrend line that we've got right here. And you can see that we started to reject. We did get a higher low here. Higher low here, but it was then followed by a lower high. So as soon as price action, it wasn't the very next candle, but the candle after that, as soon as we went below this low, we went ahead and sold. So minimal profit. It wasn't a lot to speak on, but again, because we were right by that opening print level, and because of how internals looked, momentum overall, what was I going to say? PMI and oh God, what was the other? There was a couple of economic numbers that had been released by then. So we had basically made our opening 30-minute range at that point, and we took a little bit of risk here, right? We went ahead and we grabbed puts, again, right at the opening print level, showing off of rejection off of the 15-minute downtrend. And we went ahead and entered. Now, we didn't enter very heavy initially, but we got this lower high essentially off of this 3 candle. But we were looking for a lower high off of a 2 up instead of a 3. Don't usually like to use 3s as lower highs or higher lows or wherever they're positioned. So we did find a 2 up, which was then followed by a 2 down to lock in a very solid lower high. And, wouldn't you know it, it's right at the opening print level at that point. So we went ahead and added to our position there. We obviously had already gone through last week's high, so we didn't think that was going to be much support for us, and here it wasn't. We went ahead and pushed down, got a little bit of bounce, but then confirmed essentially that intraday at least this was going to be a level of resistance for us, the 62.19 level. That's last week's high. And again, we pushed down, got a slightly lower low, but then got the lower high, and then kind of fell out at that point. We did take profit on part of our position at the overnight low level. Wanted to just really lock that in because, Fridays sometimes can turn into just sideways days, theta killer days. It's one reason why we don't buy 0 DTEs. But anyways, went ahead and took some profit there. Rode it down again, bounced off of the 60.42 level. We thought, we started to push through it, and we thought we were going to make it down to the market maker's expected move low, possibly lower, but it did catch support. This is a 15-minute broadening formation right here, the bottom of one. So you would expect a bounce off of that. Now we have this 1 hour downtrend line here. So if it failed to bounce off of that lower broadening formation on the 15, it falls back under the 1 hour downtrend. And obviously we've got more room to go to the downside. But, once we did get this kick up, we rejected off of overnight low again. So we thought, okay, we're going to probably test that 60.42 again. We couldn't even really make it to it at that point. We made this higher low, higher high combination right here, right at overnight low, or just below overnight low. And we decided to go ahead and take the rest of the profit on the rest of our position that we entered today. Right. So at that point, we were pretty much done for the day. If you were a scalper, you could have, maybe got a little bit more out of some of these moves than we did. But, we're perfectly fine with the profit that we made today. And then just based off of, bears basically running out of steam. Right. We tried testing the 60.42, getting back into last week's price action. Still within last week's price action, but really finding support off of that 60.42 level. After this third bounce, you could have went ahead and grabbed some calls just on some, risk to reward is there for you, right? No, I wouldn't have bought a 0 day. I don't even know if you could on some platforms just because of the time of day it was. But, if you wanted to swing something into next week, we've got big tech earnings next week. I think we have a FOMC decision next week as well. So got some catalysts that can take us back to the upside. We did run back into this 15-minute downtrend. This monthly broadening formation that we have here, this solid green line, it is the top of a broadening formation, not the bottom of one. So we're not looking to like bounce, come back into range and bounce. This was actually a resistance level. So you can see this 15-minute crosses over that monthly broadening formation right here as well. So, if not for time, the market getting closed, we probably would have seen some more resistance here. But it is a reasonable swing, I would think, into next week if you wanted to buy, especially if you bought like February calls for February 6th that give you much more time to work with in terms of theta. A little bit more expensive premium than trying to buy next week's expiration, but it gives you a little bit more wiggle room in our opinion. And if anything can happen over the weekend, right? And that's all it takes to gap up over a broadening formation. So perfectly reasonable if you grabbed calls down here after this, really third bounce off of the 60.42 level at the end of the day. But that's what we really had from a scalping perspective. Let me go ahead and bring it back out. If we just look in just pure progression of the day, all right? So let's maximize this sell, right? On the 15. Right, we had, not so wide. We had the push down and then the push up, and you can see this area right here, 62 to 62.50 is an area of a level of resistance support, right? Just depends on which side you're coming from. So you can, at least intraday, I don't want to say on a daily time frame or anything like that. So intraday on a little shorter time frame, like 15-minute, 5-minute. So that's why another reason why you could have expected the resistance that we saw here after the initial bounce. But overall, that 60.42 is a bigger support resistance level, and you could see why we got a little bounce there at the end of the day, and it wouldn't be a bad idea to take some swings into the weekend on there. On the hour chart, right, we have this downtrend. We're still in this downtrend. It was much steeper before, right? That's where it was before this high, the higher low, lower high. Then we went lower low. But essentially, let's move this. It did flatten out a little bit, but we're still below that 1 hour downtrend line. So, just want to keep an eye on that from an hourly perspective. We are in a downtrend. Now, we did need to do that in order to go 2 down on the 4 hour, right? So we went 2 down. Now, we were looking for a 2 down that failed, maybe a hammer candle or something like that to give us better odds at going 1, 2 down, 2 up reversal to get back to the week's highs. But you can see that didn't happen with this candle. We really just kind of fell down and sat down there. Now we did get the green hammer candle on the second 4 hour of today. So is that putting us in position for a 1 combo 2 down, 2 up, or 1 combo 2 down, combo 2 up to get back to the upside? Quite possibly. That's still out on the table. But at this point, one has to think, are we going to pull back a little bit more before we make this higher low? For one, right? That's one thing that can happen. Are we going to pull back enough to close this gap? That's another thing that can happen. Now, with the more like positive reaction on the first, on Monday, especially first the 4 hour candle, if we do get that bounce up, when we get that bounce, because of how we kind of slumped into Friday's close and really only turned green because of that push at the end, do we just push up for a lower high at that point on the 4 hour? Quite possibly. But, we're kind of in this position where we've got to have some patience and wait to see where things are going to go. We did, we get these bursts up, but then we get a little bit of sideways action. So, and a little bit of pullback. So we just want to, really respect that. And if we go to this day chart, we can see, again, we haven't even put in a 2 up to lock this in as a higher low yet. Again, we can come down to the top of this gap before we make a higher low on the day. So do we get a little bit more pullback? Maybe we pull back and get a green hammer on Monday if you're looking for a positive reaction overall. But we do have this gap that gaps like to get closed. So do we pull back and close this gap? You can see the market maker's expected move low for the coming week is 54.25, which would mean the gap would be filled. So we just got to take a look at all of that and keep it in perspective. Let's go back to the big chart and zoom out a little bit more. Let's look at the week. Let's get a cleaner chart here, and you can see yes, we went higher high, higher low in just individual candle structure, right, in comparison to the previous week. But you can see that big wick at the top, right? So bears have been able to reject the end push of the bulls, or the push that the bulls had. So it could just be another situation where we have a Momo shooter. Or if we just look a few weeks to the left, where there was a situation where this, inverted hammer, it's not as hammerish as the previous one, right? We've got a little bit bigger body, but in relation to the wick is a little bit larger as well. So it's somewhat of an inverted hammer candle. And is this where we get, a couple of weeks of downside action to fill the gap, retest the high of this range that we were in for a couple months? If we pull back to this $50 level to get, a bounce, a higher low on the weekly time frame, quite possibly. 46.79. I haven't talked about it in a while, but remember how strong of a support resistance level that was at the end of 2025 for months. Do we need to come back down here and test that from the weekly perspective to make that, turn that resistance into support at this point before we get the larger push up? That could be the case. So we just want to keep our eyes open to that. We already made it to the 200 fib extension of the April low bull flag, right? If we zoom out here and we take a look, right, here's the April low in 2025. Here's the flag pull. Here's the flag. And there's our fib extensions, right? And you can see how we've been pretty dead on hitting them and, having corrective activity around those levels. I will put it that way. So it's perfectly reasonable that we had that corrective activity around here this week as well. So again, just keeping everything in mind. We don't want to stay too zoomed in on the short time frames. Yes, it's very nice to be able to day trade SOXL due to its high beta and nice contracts that you can get for a good price. You can get some good delta and low theta, but we need to keep perspective overall. We're getting to the extension of the let's look at the month real quick before we go too far, right? Yes, we did get this higher low put in November, and we've gone higher high since then, starting an uptrend on the month chart. But we are nearing the end of the STRAT reversal on the quarter, right? If you're familiar with this channel, you know what I'm going to say. But if not, we had this one combo 2 down, combo 2 up trigger at the end of 2025. And the magnitude for that move is up here at 70.08. We're almost there. So getting into blue sky territories, 74.21 is the all-time high for SOXL. So just as quick as we make it to 70, we can be at 74 in all-time high and setting new all-time highs. So no more levels to the left to look at for to see where previous resistance and support are. We've got to really use our tools and our minds here to get these further out extended targets, triggers and targets for once we are in all-time high territory. Again, on the year, we did go 2 down last year, and then we've gone 2 up this year, giving this 2 down, 2 up reversal. Again, the magnitude for that move is up here at 70.08 as well. So just want to make sure that we stay zoomed out and keep perspective of where we're at with everything. Let's go back to the hour chart here and take a look at the market maker's expected move. Actually, to do that, let's go to the options chain. If you pull up your options chain, this is Thinkorswim, and you go to the options chain for next week, January 30th, we go over here to the right and we've got a number in parentheses, plus or minus 7.354. What that means is the market makers are expecting a plus or minus $7.35 move essentially for the week of January 30th. Now, they get this from a strangle on the options chain at the money. So there is a mathematical calculation to this. It's not just some people making up a number. And about 70% of the time, they're right. So we do always want to take note of that movement, and it's from the close price on Friday. So from 61.60, plus $7.35 and minus $7.35. And when we do that and put that on the chart, we see 68.95 as the expected move high for the week, and 54.25 as the expected low for the week. If we take a look at the week chart, what that would imply is, did I not put it on the week chart? Oops, that's not the week chart. There we go. What that would imply is that we could go 2 up, we could go 2 down, or we could have an engulfing candle, right? A lot of times, your market maker's expected move low will be within the previous week's candle, especially if you got a lot of momentum. So what that signals is that market makers expect a lot more volatility this week. We'll put it that way. Again, we've got FOMC, we've got big tech earnings, so that goes along with it, right? And what that shows also is that if we do market to the market maker's expected move low, we should fill that nearest gap to the downside. So just want to keep that in mind as we go over the market maker's expected move high. Let's zoom in again to start looking at the 4-hour markers and our triggers and targets for Monday, January 26th, and then we'll talk about the week, month, quarter, and year targets as well. If we take a look, so tomorrow, there we go. So if we take a look at the chart here, I've just pulled up the 5-minute. Again, this is how we take advantage of the proven and repeatable strategy to get into scalps early in the morning or early entries into longer day trades. As of right now, overnight high and overnight low are right here. Let's move those because they're probably going to move by the time we open price on Monday. And we'll just put that here, right? So those kind of line up with obviously last week's 50% line, this dashed purple level, which is also the 150 fib extension of the end of 2025, the range that we traded in for the last 3 months of 2025, lines up with the monthly broadening formation. Overnight low would line up with our 100% fib extension of the holiday bull flag. So reasonable spots that we could see overnight high and overnight low to be. Let's just say that we open, a little bit lower towards the low end of the overnight range. This is where we pull out our strategy, right? So if price opens here on Monday and we get a push up, maybe we get a rejection off of that monthly broadening formation, last week's 50% level overnight high area, and we pull back, but then we get a higher low at or above this opening print level. We want to look to get into calls going back to the upside. First target being overnight high, second target being previous high a day. Now, depending on where your entry is, right, overnight high may not be that great of a target for you. Especially if we poke above overnight high, come back down, make this higher low, like right at overnight high. Come on, what are we doing here? There we go. We could, experience that. Let's get this back on the chart. There we go. Right, it could experience that higher low right around that overnight high level, and then obviously that takes that off of the plate. And previous high a day is your ultimate target at that point. Now, again, price can go past the previous high a day. We're not saying price is going to stop there, but it's a good place to either take profit, set stop losses, however you want to manage your risk. That is just where price is expected to go to. With the move, using this method. Again, it can go past that level. If it does, we turn to our 4-hour notes, our 1-day notes, things of that nature, which we'll get to in a second. But just speaking strictly from this simple strategy, overnight high and previous high a day are going to be your targets to the upside, and overnight low and previous low a day are going to be your targets to the downside. So, right, if we open here, we push down, maybe we bounce off an overnight low, maybe even push down to previous low a day and we bounce, but then we get that lower high at or below opening print. We want to get into puts. Obviously, overnight low, no magnitude there. Previous low a day, not really much magnitude there either. So this is where your risk to reward comes in. Do you want to risk however much you're going to risk on the contracts to get this much reward? If so, I hope you're really in the money, and I hope you got quick fingers, right? So the spreads right now are definitely more spready than 6 months ago on SOXL. We've had more volatility. So the price has gotten higher. So the stop losses aren't that simple anymore with these. We've been doing a lot of manual selling over the last few months, as opposed to stop losses. Now, setting limit sells, we've been doing that a lot, where we have a sell set at a certain price, right, So we're looking to take profit there, but stops are a little bit harder. So if you're going to be risking it down here, make sure that we've got some momentum. You've got things on your side. You've got internals that are negative. You've got, other parts of tech that are negative, some type of economic catalyst, things of that nature that are telling you that, we should push through previous low a day anyway, right? But again, that the magnitude would be to the upside for that. So again, just to state real simply, we're looking for higher lows at or above opening print to get into calls, or we're looking for lower highs at or below opening print to get into puts. Just that simple. And again, manage your risk to reward. Let's zoom out to the 4-hour chart here and look at things from more of a day trade, overnight swing even perspective. Looking at the 4-hour chart, well, actually, let's look at the 1 hour real quick, right? Because we do have that downtrend, right? So you can see we're in this downtrend. Yes, we're pressing up towards the top of it. Oops. Let's get the right tool here. So if we just draw a line here, high, to lower high, that's our downtrend line. If we're able to gap over it either Monday morning or push through it, obviously we're looking at, changing a trend. So what that implies is you've got to have a little bit more patience, right? You may not want to risk as much or reward as much, because again, we may change the 1 hour downtrend to up simply to go 2 up on the 4 hour just to make a lower high on the 4 hour, right? Does that make sense? So you got to be nimble. You got to be willing to take a small loss if price goes back in the other direction. All right, let's get back to the 4-hour chart. Yeah, there we go. And on the 4 hour, we can see again, we were looking for with the second 4-hour candle of Thursday being an inside candle or a 1, we were looking for a 1, 2 down, 2 up reversal, which would put us back at the week's highs. But we did get the 2 down, but not any type of hammer action or anything like that. This was definitely a bearish candle, closed below where we opened, wick on top, a little bit. There's about an equal wick on bottom as well, but a solid body in the middle. So bearish candle if you're looking at it from an individual candle perspective. And then the second 4-hour candle of Friday didn't do too much else to help out, right? We pushed down again and actually went lower than the first 4-hour candle of Friday. And it was only that push at the end of the day that really popped that candle back to being green. So again, we talk about the previous week's 50% level every week. How is that level tested, right? Are we going to reject off of that? Because that test of the 50%, the previous week's 50% level, a lot of times will indicate what's going to happen for the rest of the week, or at least for the next couple of days, right? If we test this intraday on Monday and get rejected, we probably going to see the bottom, last week's low, probably going to go 2 down on the week. If at the very least we're going to get close and test it before we would bounce and go back up and still have to retest last week's 50% level, which again is lining up with this monthly broadening formation. So definitely expect resistance here. Now, if we can just blast through it or gap up over it, obviously for the first day or two of the week, that bodes well. But then it'll be, do we retest, right? Do we just push through the previous week's high and just keep going? Or do we get that pop and then retest the last week's 50% level from above this time? And then what is the result of that? Do we just hit and go sideways for the rest of the week? Do we blow back through it and now we're back to testing the bottom side of the previous week's candle? Or do we get that bounce, right? So opening right around that 50% level does make it a little bit tougher because you don't get that direction going to that level. We're opening right at it. So again, it implies a little bit more patience that we'll have to have. But if we do get that price action to the upside, it's a 2 down, 2 up. First magnitude, the magnitude of that move obviously being the high of the first 4-hour candle from Friday. But if we reach that and breach that then triggers this 1 combo 2 down, 2 up, just like on the quarter chart, right? And then that magnitude is back up at the previous week's high at 66.96. All right. If we go to the downside, we've kind of already talked about it, but it would give us this combo 2 up, combo 2 down, first magnitude being here at 59.46. And then we've got a little bit of a gap on the 4-hour, right? So that could be a little bit more momentum to push us down, right? And the magnitude of that combo 2 up, combo 2 down is the top of the gap right here, back at 57.22. And then, if we poke in there, we got to look at, are we going to fill that gap? Now we got this 161.8 fib of the April 7 bull flag that's right here, right inside this gap. do we just poke in and bounce just like we did in the previous week? The gap actually was up here the previous week, and we just poked into it, and then right before we bounced out of it. So do we get another something like that? Possibly. Otherwise, I'm looking for the gap fill, and then that test of the market maker's expected move low, which lines up perfectly with the 150 fib extension of that April 7th bull flag. All right. That's what we've got on the 4-hour. Let's look at the day real quick. Again, somewhat of a hammer candle, but we've got a wick at top, so more of a neutral candle if looking at the individual candle, if you're asking me specifically. But again, if we get action to the upside, that's a 2 down, 2 up reversal, and we're targeting last week's high, and going from there. If we go to the downside, again, it's triggering a combo 2 up, combo 2 down. First magnitude being down here at this 59.46 level, and then we've got that push down to the top of the gap, last week's low, and we'll see where it goes from there. That would complete the STRAT reversal at that point, but again, we've got that gap below, and we'll have to see what happens at that point. Let's go to the notes here so we can look at some just hard numbers, right? So for Monday, January 26th, there will be 236 trading days left in 2026. The close price on Friday, January 23rd, was 61.60, and we know that the month, quarter, and year all opened at 45.13, meaning that the month, quarter, and year are green, and to turn them red, we would have to go back below 45.13. Obviously, we've got to wait for the week to open to determine whether we're red or green on the week. We talked about the market maker's expected move for the week being $7.35 plus or minus from the close on Friday, giving us a range of 68.95 to 54.25. No more gaps above, so don't need to worry about that, but we do want to make sure we keep note of where our gaps are below. Again, getting close to this first gap below us. We talked about on the 4-hour, if we go to the downside, it is a 2 down, 2 down, triggering at 60.15 with the magnitude of, this is a 2 down, combo 2 down, there we go, with the magnitude of 58.62. If we go to the upside, it is a 2 down, 2 up reversal, triggering at 61.62 with the magnitude of 63.36. But if we do get there, again, it triggers that 1 combo 2 down, combo 2 up, and that magnitude is up here at 66.96, listing 64.44 as a possible level where we level out, reject, have some type of corrective activity, because that will be a decently substantial move from that 61.62 trigger. We talked about on the day, if we go to the downside, we're getting into that 2 up combo 2 down situation again. Sorry about the notes. There we go. And we've got the combo 2 up, combo 2 down that triggers if we reach the magnitude of the 2 up, combo 2 down. So all starting at 60.15, looking for 59.46. Obviously not that much magnitude there, but from there we've got extended targets due to basically a snowball or a domino effect, moving down, losing levels of support, and looking for the gap close. That gap close is at 55.44. We put a target of 56.33. That is the half gap. If you're familiar with this channel, we talk about that a lot. A lot of times halfway through the gap is a point of reversal on an intraday level. We're not talking about the gap overall never being filled or anything like that, but a lot of times intraday you'll hit that 50% level of that gap, and the price will bounce for a certain amount of time. A lot of times retesting the top of that gap, if it pops back out of what was the top of that gap and we get a higher low at or above that level, then obviously, short term, we're not going to go back into the gap. But if we go up and test what was the top of the gap originally and reject, then we have a better chance of going and filling that gap back down to the 55.44. And to the upside, if we go to the upside, it triggers that 2 down, 2 up at 63.36. Magnitude for that move, because we are in that 1-hour downtrend and possibly just setting a lower high on the 4-hour, I've got 65.04 as a target, but the ultimate magnitude for that 2 down, 2 up reversal is 66.96. So decent magnitude there. If we're just running, like if we've had some type of catalyst over the weekend or Monday morning or anything like that, we could see 67.39. But again, that's a pretty big move, about a 10% move, and so we'll see how things go from there. Actually, a little less than 10%. Anyways, for the week of the 30th, we won't go back to the charts. We've been through the charts long enough. If we go to the downside, that would trigger a 2 up, 2 down at 57.22. The magnitude for that move is 52.35. But if things really get to rolling, catalysts and all that, then we've got the extended targets listed out here for you. If we go to the upside, it's just the two up continuation that we've been in for weeks now, and that triggers at 66.96. We've got a target of 68.95, 70.08, which is the magnitude of the quarter and year reversal strats, and then we've got 73.15 as the next structural target. I guess I could put up the 74. Where's my 74.21? There we go. Guess I can put up the 74.21. This is the all-time high. All right. On the month, we talked about we are in a 2-1-2 up continuation, triggered at 50.09. It's already reached magnitude and a few of our extended targets here, but we've got some left out here that we could meet by the end of the month. Only 1 week left in the month, but 68.56 is definitely a reasonable target. That's even within the market maker's expected move for the week. So don't really expect to get to the 70.08 magnitude, but I mean, it's not that much further, and SOXL can run. So just want to keep that out there. On the quarter, we talked about we're in the 1 combo 2 down, combo 2 up that triggered at 50.76 this quarter because it's a continuation of the 1 combo 2 down, combo 2 up that triggered in the fourth quarter of 2025 at 36.15. So as long as we're above 36.15, we're still good from the standpoint of being in the 1 combo 2 down, combo 2 up reversal. But we would rather stay above 50.76. That's much more bullish. All right. We have the extended targets here on the way to the magnitude of 70.08, and then we've got actually that should be a target. There we go. Extended targets listed out here: 73.15, 75.65, 78.16. On the year, we're in that 2 down, 2 up reversal, triggered at 50.76. Magnitude for that move is 70.08. Again, 74.21 is the all-time high, and then we've listed out some extended targets for you based off of the fib extensions from the April 7th or April low bull flag. All right. So there you have it. Those are your triggers and targets for not only Monday, January 26th, but the week and beyond. Hope you enjoyed the video. We tried to jam in as much information as possible without taking up too much of your time. We'll be in this little storm this weekend, so probably work on doing some more detailed videos, as far as like setting up the charts and things of that nature, kind of spruce up or update the ones that we have out there, maybe add a little bit more detail, but just get things up to date because price is so much different. Volatility is different, things of that nature. So just get all that stuff up to date. So keep an eye out for another video this weekend, but use this as your guide going forward on Monday and beyond in the near future. So again, hope everybody enjoyed the video. If you did, give it a thumbs up. It's free to give the thumbs up. The video's free. We don't ask for any memberships or anything like that. We just want to spread the word about SOXL and maybe a more simple way to trade it. So thumbs up goes a long way. Giving a share goes a long way. If you got somebody that you think this could help, the method that we use doesn't work just for SOXL. It works for any publicly traded company in the U.S. stock market. So, send it on out to somebody you think that it might help. And we'll go ahead and end the video here. First of all, hope that everyone stays safe this weekend. There is going to be some pretty crazy weather, according to everybody, all the weathermen and all of that. So hopefully, hoping for as little power outages as possible, hoping just everyone can stay safe and warm. If you can help somebody, help them. If you need somebody, reach out for help. You never want to be out there alone or suffering when somebody can help you. So just reach out to somebody if you can, and we just hope that hope the best for everybody this weekend. But we'll go ahead and end the video here like we normally do. If you're watching this Friday, Saturday, Sunday, anytime before Monday, we hope you enjoy the video and then get some good rest on Sunday night. That way you can wake up refreshed on Monday. If you're watching this Monday morning or Monday during the day, we hope you got some good rest last night and woke up refreshed this morning. And we look forward to getting out there and trading with you.